Helicopter taxis are a thing and you can invest in them now. There are a lot of big names coming in behind this SPAC. Today we're going to take a look at Blade. Welcome back to the channel, family. My name is Trey, getting in touch with you from Japan. Today we're going to be looking at 9 things you need to know about Blade and the SPAC EXPC. I've heard the name Blade thrown around a few times here and there, and I've been really interested in looking into it because it could actually become one of those things that's like thinking about how Tesla is right now, but like 10 years ago. It could become like a legit huge thing going into the future. So I looked into Blade and the SPAC merger that's coming up and broke things down in a kind of simple, easy to understand format for you. So hopefully this is a helpful presentation. If you're interested in learning about more stocks, learning about how to invest, learning about these kinds of things, please join our channel. And if this video brings you value, please hit the like button down below. That helps us very, very much. Number one, there are some really big names behind this SPAC. You've probably already heard that Cathie Wood and her ARK Invest funds have invested in this SPAC. What's really interesting to note is that ARK funds typically are like really cautious about investing in SPACs. As far as I know, they've only invested in 3, maybe 4 SPACs so far. SPACs have been around for a while, but this year, 2020 and 2021, I guess, they've really blown up in being like really speculative. And a lot of people are starting to believe like, just put your money in a SPAC and it will like 5x today type thing. And so I think there's a lot of volatility that's often quite disconnected from the actual fundamentals of the company. And so ARK and Cathie Wood putting their money in this SPAC should be a big source of like reassurance for you. It's currently in the ARK-Q fund, but I also wouldn't be surprised if we were to see it in the upcoming ARK-X fund, which is like space travel and I think space mining and things like that, like going to be very long-term forward-looking fund that's coming up in about 40 days from the time of filming today. We're also seeing some other really big names like Eric Schmidt, who used to be the CEO of Google, and Ian Osborne, who is Chamath Palihapitiya's partner, coming behind the SPAC as well. Blade CEO Rob Wiesenthal used to be the CFO at Sony of America, and he was also a COO of Warner Music Group. Additionally, I should mention that Blade has been operating since 2014, and therefore they have a lot of partners who have been investing in them for years now, including Airbus, basically the biggest or second biggest, depending on the year you look at it, aircraft manufacturer in the world. So obviously they're very excited and very invested in the future of what Blade is doing as well, which I'll get into in a minute. Number 2, it's already a real company making real money. Like I just mentioned, Blade's been in operation since 2014. We're continuing to see their customer numbers as well as their recurring customer numbers and many of their other key metrics growing and growing over the years. Check it out here. They've provided the Blade operating metrics history phase 1. They have a chart for our passenger growth from 2014 all the way up to 2019. Started with 1,200, 2,500, then up to 13,000, 18,000, 24,000, 37,000. And obviously this is before the current pandemic that started in early 2020, which has affected a lot of their numbers. But interestingly, we'll get into in a minute here, maybe even boosted some portions of their revenue streams as well. They show here in the revenues from 2014 all the way up to estimated 2020, because this chart was made in 2020. You can see the revenue growth in millions going up healthy, big time over the years. And then they also mention here on the right, positive gross margin in all years, which doesn't necessarily mean positive EBITDA, keep that in mind, as well as expansion from 2014 to 2018, driven by growth in existing core business with minimal contributions from new routes. Number 3, they have big growth and big profits projected soon. Morgan Stanley Research says this sector is going to be a $125 billion industry by 2025 and will probably grow to be over $650 billion in the next 10 years. Blade is currently the biggest player in the space, especially in major cities in the US. They've serviced over 200,000 customers, many of which are repeat customers who become loyal to the company. And they're also showing here some projected financial results. Check it out. The top half of the page is revenues, going from 25 million expected, hoping, praying that they can get up to 875 million in revenues by 2026. Take note of that baby blue line drop down there between 2024 and 2025. It says no use of passenger eVTOL assumed before 2025. I'll get into this more in a minute, but eVTOL or eVTOL, depending on the reading, I mean, we say EBITDA like it's a word, so I'm just gonna say eVTOL. That stands for electric, vertical, takeoff, and landing which is basically like a new version of helicopters. And I'll get into that in a minute. But they're saying in 2025 here, once they start using these, profitability and costs are going to change dramatically, and the revenues are going to go up much more. Looking at the EBITDA down on the bottom half of the page, and keep in mind when you're in growth mode, when you're developing like a whole new segment of anything ever, like it's not that crazy to be kind of floating around minus. Right now they have a really healthy balance sheet, but as they show here, they're kind of like just negative EBITDA until what they're hoping for in 2024, and then taking off to the moon after that. And continuing on with that, they've shown prior year 2019 actual results, and on the right side they have projected 2024 estimates. $33 million of revenue jumping up to $402 million in revenue, going from 10 scheduled routes up to 28 scheduled routes, as well as like a further diversification in the weight that each of their services provide for those revenue streams as well. I'm gonna get more into the actual business model here in a minute, but number 4 is that they have clear plans for how to use this SPAC money. Check it out, they've identified many investment opportunities, including boosting the number of heliports they have in their busiest part of their business in the Northeast. They're also exploring expanding more on the West Coast, like into cities like San Francisco and LA, boosting the number of routes, especially in the Northeast, potential acquisitions to smaller companies or smaller organizations that may boost profitability. And in this next slide, they show some of these routes in particular, including international. Check it out on the top right here, they have West 30th, East 34th, these places in downtown Manhattan, which are already very, very busy. Let's keep in mind that the pandemic has drastically affected that, and they're like very forthcoming in their calculations when they look at that. But the research I've done online shows that like the people who work or live near these stations, like on a Friday or Saturday with good weather, like these heliports are busy, dude. Like there are people flying in and out of them all the time, continuously, all day. And we have Long Island, Nantucket, Manhattan, 4 locations, Southeast New Jersey, Philadelphia, Wilmington, Delaware, Baltimore, Washington, Miami, Florida, LA, San Francisco. And then they also show down here on the bottom left, present international infrastructure in Mumbai, in Shirdi, and Pune in India. They're talking a lot about making more partnerships in India to continue to grow there. Then on the bottom right, they have my motherland, Canada, Vancouver. They have Jakarta, Indonesia, and they have my current residence, Japan as well. So they're talking about like pretty aggressive international expansion. And when you're targeting really, really big metropolis cities, LA kind of is a little bit different, but places where there are a lot of people with a lot of money who are in a rush, where traffic sucks, especially where public transit might exist, but because of the pandemic and sickness and people being in a rush and things like that, there are more and more people choosing to avoid those options just because you're exposing yourself to so many people. And so if you have hundreds of millions of dollars and your time is worth, you know, $500,000, $2,000 an hour, if you can save an hour by spending $200 to fly to the airport from Manhattan, for example, like, it's kind of stupid not to do it. And that takes us into number 5. What do? How do they work? What's their business model? So I've heard a lot of people equating this to the Uber of helicopters, and it's kind of different. Like when you think of Uber, a lot of people think of like just basically taking advantage of people who have a car and might not have skills, or you know, they have a really weird schedule, so they just need to make some money in between the hours and stuff like that. And yeah, there are a lot of people who make good money using Uber, but there are a lot of people struggling who hustle and like don't make jack after taking into account like taxes and gasoline costs and all that stuff. And then on top of that, in the media, we've seen all of that drama with like the difference between an employee and a contractor, you know, with Uber basically sidestepping their responsibility to provide things like health insurance for their workers, who they say are contractors. Like it ends up being like a very kind of gray situation. And in certain cities around the world, there are still ongoing fights, like is Uber okay or not? Are these fair working conditions for taxi drivers or taxi drivers? What's the deal? And so I kind of don't like to call Blade the Uber of helicopters, because it's not necessarily like some poor guy sitting around with his ghetto helicopter who's just like, yeah, I guess I'll fly because I have nothing better to do kind of thing. And not to say all Uber drivers are like that, but basically the way Blade works is there are already existing helicopter and even small jet companies that are doing services like this. But when you're running a small company like that, not only do you have to worry about pilots and training and safety, as well as maintaining them, as well as marketing, as well as customer service, pricing, and all that stuff. And so actually check it out here. They've provided this little diagram where it shows helicopter operators normally have to deal with all these different things, including marketing, customer service, technology. Now they can basically outsource that to Blade up on the top here, including strategic infrastructure. So these existing helicopter companies or small plane companies don't have to worry about like, dude, we have to lease this helicopter pad in the middle of New York City on 23rd or whatever. Like now Blade is coming in and setting all these things up, and they're increasingly talking about buying and locking down and getting the rights for more strategic places in big cities like this. So they can go out and say, hey Bob, with your helicopter company, I see you have some openings in your schedule. Would you like us to fill them for you? And the helicopter companies and these small travel companies are just like, dude, that sounds awesome. We're happy to pay you a portion of the income. Thank you very much. You know, and it sounds like a lot of these partnerships have been going on for years already. So it ends up being win-win-win because these helicopter companies are getting more business and more profitable. The customers are getting a cool service that's much cheaper than it would normally be probably. And then also Blade is growing and developing as well. Check it out here on the left. It says, Blade dramatically increases our operators' volume, revenue predictability, and reduces their fixed costs. Blade buys aircraft time by the hour from our operators, covering all costs associated with flights. And then down there in the bold, it says, if we don't fly, we don't pay. And so that's also a way for Blade to keep their costs down and leave a little bit of the risk on the airline or the helicopter company, whatever it's called, on them as well. And so this ends up being like a really good win-win-win proposition. Blade operates 4 key lines of business. The first one is short distance, which is basically flights between like 60 and 100 miles, particularly in places where the traffic sucks. And these flights will end up costing somewhere between $600 or $800. Or if you get a commuter pass, which basically says, I'm going to be using you all the time, then it's like $300 a flight. And that sounds extreme for a lot of people around the world, but when you think about the fact that like, whatever that fact you always hear, like 10% of the wealthiest people in the world own 90% of the resources. Like spending $600 to save a couple of hours or not have to deal with carrying your luggage down the subway or whatever is like a no-brainer, I think. The second key line of business is Blade Airport. Check it out, they have a bunch of terminals and lounges. A lot of these are in New York. I think some of them are developing in other places around the world. But basically, if you're in New York, for example, you need to get to any of the airports. There's a bunch of airports around there. It's $200 to just get there. And it's like super fast, super easy. And it's even less if you get a commuter pass, if you're doing it regularly. They show some pictures of the lounges down below here. And it's interesting because it's like made into like a very premium. In some of the charts, they actually equate themselves to Ferrari, where it's like very premium, very luxurious, very magical. And it seems like a no-brainer, I think, for people who have money. The third key line of business is joint ventures, which I'm not going to talk about it right now in this video because it's not like a huge thing yet. And then number 4 is the medical part of the business, which I'll get into in a few minutes here. Fact number 6, they solve the problem of traffic and commuting for the wealthy. I think if you live in any of these major cities, it's undebatable that traffic sucks. And actually, I'm seeing a lot of statistics that saying traffic is back up to pre-pandemic levels in a lot of these major cities. I've been in San Francisco driving from like Pier 1 4 blocks, and it took me like 45 minutes. You're basically just sitting there. Like walking is way faster. That's how stupid it is in some cases. It's definitely like that in Tokyo sometimes. I imagine it's like that in Mumbai and all these other major cities. And so if you're a baller with a bunch of money, you will pay for it and you won't mind. You'll just use the app like an Uber. Just be like, hey, I need to get on that flight that takes off in 20 minutes. The landing pad is right there. See you there. They show some examples of how much time you can save. They have a case study of Manhattan to JFK. Saying that it is up to 2 hours faster than driving and up to 45 minutes or an hour faster than taking subway and air train. And then as far as cost goes, Uber Black, which is also kind of premium, is usually around 215-ish bucks if you include surge pricing. And then a premium car or limo would be about $250. They're saying Blade in this case would only be $195. So if you can rely on it and you're not going to have to deal with all that traffic, why not use it? They have another case study on the right here, New York City to Philadelphia, saying it's roughly 2 hours faster than driving, an hour or 45 minutes faster than the Amtrak or Acela, and probably a lot cheaper than a flight, and about the same price as the Amtrak too. So it's like, why not use it? You don't have to deal with other people. You get a cool view. Continuing on traffic, if you're unfamiliar with New York, basically this kind of central peninsula sliding down from the top down the center to the left, that's Manhattan. That's the busiest place in the world. And we'll see if it continues to be in the coming years as well. But they show 5 different airports here and all of those little lounges I was mentioning earlier and all the flight routes in between them. So it's like very thorough. And if you're needing to be flying out of any of these airports, I would imagine it's just like such a beautiful solution. Number 7, they aren't just for commuting, they're also in the medical field. So I mentioned those 4 key lines of business that they operate in. Number 4 was medical. And as you know, if you live in America, anything medical costs jillions and quadrillions of dollars. And so if there's an emergency, if somebody gets in an accident and they're like, I need a new heart, they can use a Blade helicopter, pick up a heart from a hospital and fly it over to the other hospital where the guy's at. And typically this was either impossible or done by an ambulance, I believe, or maybe a jet flying across the city to another airport and then transported some other way. But basically this could be saving lives. And also the profit margins are probably pretty bonkers on this too, I would imagine. Blade also mentioned that they are the largest transporter of human organs in the Northeast US. So they already have a pretty good lock on this business, and there's no reason to expect that would change. I showed you this revenue chart earlier. I wanted to zoom in on 2019. You can see the highlighted, kind of that orange color, Medi-Mobility and Jet, made up almost a quarter of their revenues in 2019. Number 8, Blade's partners and the companies they work with aren't just random companies. They're actually very thoroughly inspected, and they're also pretty strict about partnerships. Should also mention that Blade doesn't own any of their aircraft, which is, I think, why a lot of people equate them to Uber. But by not owning any of their aircraft, they don't have to worry about any of that upkeep or depreciation or things like that. But they work with all these different companies who are already the masters of that. And so Blade doesn't own any of their aircraft, but they really thoroughly vet their partners who do. They say each operator must pass comprehensive safety evaluations. Operators also must meet Blade's standards for customer experience and operational efficiency. The aircraft they use must be basically as new. So they're not going to be sending you in like a ghetto rundown, like, you know, the seats are all torn and the windows are all jacked. Like, it's going to be very premium every time. Strict maintenance reviews, as well as a thorough understanding of using Blade's operator dispatch systems and their accounting dashboards as well. It shows here in the next slide, Blade built a customer-to-cockpit urban air mobility technology platform. So if you've ever used like Uber or Lyft or these kinds of companies, they always have their cell phone up there. It's showing them where to go. It's showing them how much everything's going to cost. And it's basically the same thing except in the cockpit here. And the pilot is connected to Blade's software. And also dispatch is too. Number 9, eVTOLS, eVTOLs may power an even more profitable future if they can get going. So this one's a little bit tricky because it's like they show it in their investor presentation as if it's like something they're doing. So you need to be careful about that. And also look at the stock market now. Look at anything relating to anything electric and their stock prices are going bonkers. So I feel like this is kind of like, hey guys, you should invest in us because we're electric vehicles too. And they show a bunch of different companies that have invested over $5 billion combined in eVTOLs over the last 5 years, including Airbus, and a bunch of other companies like Boeing, Lilium, Bell, Joby Aviation, and Volocopter. And the cool thing about these aircraft is that basically they're super quiet, they can take off vertically like a helicopter, but they can also fly faster than helicopters can. Imagine just super quiet, like you don't even notice, it's just kind of like woo, like Jetsons style. Much lower running costs, probably much easier maintenance. They do have pilots, they're not just going to be automated. I think Uber was talking about like, yeah, we're going to make automated things flying around all over the place. And everybody's like, dude, worst idea ever. So these will have pilots and they're also going to be zero emissions. I think the speeds they were talking about is 180 miles an hour versus existing rotorcraft about 150 miles an hour. So like marginally quicker. But the thing that's kind of holding things up is regulation. These are new aircraft. And so you need to jump through a bunch of hoops internationally and nationally to figure out if they're okay to fly. But they showed here regulatory officials are focused on eVTOL certification. And there are a bunch of companies who are building these things that are already working with the government. And they're saying, we don't need to make new regulation. And they're saying, we expect to be issuing certifications prior to 2022. So literally this year, these things could be good to go. I don't think this is super crucial for the business to be successful. It's just going to boost margins and probably boost the cool factor if it is to get going kind of in, 23, 24, maybe 25. So that's 9 things for you to know about this SPAC Blade merger. What do I think about it? I think it's really, really interesting. It's really exciting, and it'd be cool to get in. This thing does actually grow up to be a $650 billion industry, and everybody's flying in these things all over the place for work every day in like 10 years. It's like interesting to consider work from home, working over the internet, working at a laptop wherever is totally becoming a thing. So I don't know if demand will continue to be the same forever. That being said, they're not targeting everybody. They're not targeting even like middle class people who make $50,000 a year. They're targeting people who have like a lot of money. And I don't think demand is going to be tapering off big time like it would in a lot of these other industries, like maybe even normal air traffic. Right now, the stock price sits a little bit above 14 bucks. In my kind of rudimentary look at the numbers and kind of what they're estimating for the future, I feel like 14 bucks is okay. Like it's not like, oh my gosh, this is the deal of the century when you consider risk versus reward, but it's also like this actually could become a really monstrous thing in the coming years. And Blade, I think, will continue to be the forerunner in this area. As they continue to grow internationally, I think, kind of like Tesla actually, I think starting at the top with $150,000 cars, once they figure out how to do things, once they figure out how to get the systems going, then they can start offering cheaper and cheaper cars. And Tesla's actually talking about building like a $20,000 electric vehicle that's really safe and has really good mileage and stuff. This could be one of those things where it's like these replace taxis. Like driving on the floor is stupid now because you can just fly everywhere easily, quickly, and actually not even really expensively either in 10 or 15 years. So my opinion is that it's very much like you got to have a lot of hope and you got to have a lot of breathing room in your budget to be going heavy into EXPC. But I think 14 bucks isn't that insane. You might see some good upside kind of in the next few years. I really wouldn't be getting into the stock unless you were willing to hold it kind of until 24, 25 or beyond. Personally, I might grab a little bit, but I'm not going hard at it. And I think if I was going to go hard at it, like 10 or 11 bucks would have been much juicier for sure. What do you guys think? Are you going to jump into the stock, the SPAC? Let me know. Let me know down in the comment section. If this video was helpful for you, please leave a thumbs up. That helps us out very much. Thank you guys very much for your time. Have a great one. Love you and talk to you soon.